Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, February 24th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES. Right now, you'll notice here price selling off prior to the RTH open on PCE price index data points, core PCE price index. We still have a couple of more data points coming out later on after the RTH open, including new home sales, so additional volatility could be seen. As of right now, we have ourselves a 3-day expanding range. If you look at the intraday time frame, a little bit of an expanding range here, chopping above and below that 4,000 level. We could continue to remain mostly within range heading into the end of the day, especially if price starts to reject back above the previous session's low. That could open up a return back up within the range, and we could basically trade and chop around 4,000. Now, if there's a failure to reestablish back above the previous session's low, back above 3980 for example, then we could begin to see further expansion to the downside, and that would open the door through this previous month's midpoint right there. Breaking through that zone may open up more downside as this market perhaps approaches 3900 over the course of the next several days. So right now, still in a downtrend in the short time frame. It broke down back below the 40-50 level. It broke back below the previous month's high price and the close, which opened up the return to the mid. Now, again, a failure at the mid would open up a return to the low. So at the moment, this market right now continuing to show downtrending price action on the short-term basis, but we are within a narrow range here, so keep an eye on the previous session's low. A return back above that 3980 could open up some short-term strength intraday. Taking a look at the NQ right now. The NQ currently below 2-day lows as well. Also an expanding range on the intraday time frame here over the last few days. Again, downtrending price action. Rejected off the 12.8 level here. A big time rotation back down. A failure to hold the 12,300 level, and now ricocheting off that level from below. So again, that's going to be the key level to watch, is around that 12,265 to 12,300. Above that zone could lead to a bit of a rally. Right now, keep an eye on 2-day lows. If price can get above 2-day lows, there could be a bounce back toward 12,150 intraday, maybe as high as 200, as this market trades within range, but with a downward bias. A failure to hold 12K will start to open up the next zone below between 11.4 and 11.6. All right, let's take a look here at crude oil. Crude oil right now showing a developing failed new high in a downtrend within a trading range. Recently we had that bounce back here, kind of this hard bounce back and a close above the prior mid. At the moment, showing a bit of a failed new high in the downtrend. This is going to be interesting here. This is the FOMC key level from February 1st. So far went offered here, then it went back to the level and through it, bounced off of it here, rejected, came back to the level, took the level offered, now testing it and rejecting it from below. A lot of action off that level, 76.38, since that level was created February 1st. Still kind of a downward trend here. We haven't reached the edge. That's why this bounce was a little surprising here, but we do have 72 as the next support level down. So if this becomes a true on failed new high, it could open up a swing move into 72s. From an intraday perspective, a failure to hold above the previous session's high opens up the midpoint from an intraday perspective, just shy of 75s there. Taking a look here at gold futures, this one currently down about 0.25%, still trending lower. This one is clearly being sold off right now in a way that is slow and steady, but there's no doubt which way the trend is going. Ever since this outside day extreme reversal rejection here, you had price sell off on day 2. It has never been able to find its flows. That's likely to cover shorts that had initiated here, but at the same time, this market continues to eat through that level now. It's now below 1830, and below that level starts to open up the next key levels below. We could be looking at a return as deep as 1740 up ahead if this market cannot maintain acceptance above the 1830, 1840 zone. So right now, steady selling pressure. Low range days for the most part, so the volatility is low, but there is no doubt which way this thing is going. So after every bounce or counter trend rotation, it's an opportunity to sell for a continuation downward until we see some sort of strong rejection point on the lows. Lastly, taking a look at the YM, this one's down about 1% right now, testing the previous session's low. This one also has kind of an expanding range on the intraday time frame. We are seeing price test the bottom of this larger range. We talked about this large range here that had been developing before, from here to here. Most recently, we had it compressed like this, and we've seen it break down last week. Rather, that's earlier this week. This is the first trading day of the week here. And we've seen it continue to push downward since inflation data day here. It's been a steady move down. We've now reached the bottom of this rectangular range, though. Are we going to see a bounce off the 32,750s, which bring us back to 33,750 or perhaps higher? Or is this a moment here where price has now taken the previous close offered and is now working back toward the previous midpoint, which would be much lower? Are we working lower? Are we breaking out from this larger compression to the downside, or have we already broken down out of this compression? And if the answer is yes, then we could be looking at further weakness over the next multiple weeks that takes us, again, between 4,000 and 5,000 points over that span. If we're taking 34K offered, then we could be looking at a move that takes us somewhere back toward 29K or maybe as shy as 30,000. So this could be significant, especially if price starts to drill through these most recent support levels. So we'll continue to watch that zone to see how it develops. It could remain a narrow 3-day range here today with a downward bias, but again, keep an eye on 32,750. All right, that is it for now. We'll see how this develops heading into the rest of the weekend. Good luck, trade well. Please be sure to like, share, and subscribe, and we'll see you in the trading room. Take care.